Hi guys, it's Ian from OSBFX. It is Monday, the 6th of March 2023. It's just gone 12 o'clock in the UK. Today my concentration is on New Zealand dollar against the US dollar. We've got some interesting patterns forming on the intraday charts, and we've also got some nice correlation when we move over to the single currency baskets. Let's have a look at the charts. So I'm using TradingView. I've got a monthly chart here in the middle, weekly, daily, 8-hour. At the moment, that's a 2-hour chart, and then down to a 1-hour chart down here in the right-hand corner. And this is where my concentration is today. If we expand this chart, we can see that we've got a confluence area to the downside here. So that's 61.50, 61.48, so a nice tight confluence area. That in turn forms a cypher pattern known as a bat formation. A bullish bat formation that will often highlight the end of a trend and the start of a new upward bias. So there is scope for further selling in this currency pair, but I'm looking for that to be limited. You can note here that I've put this dashed red line on the chart. If I go to the 2-hour chart, that dashed red line has the potential to form this BC leg of another cypher pattern, another bat formation, in fact, which has scope to move all the way up to 63, 62. So using the two patterns, getting long around about 61.50, targeting that area at 63, 62, and there was a stop below the previous swing low. Obviously, if it breaks that previous swing low, then that original bat formation is broken and invalidated. So that gives us a risk reward of around about 9.6 to 1 buying New Zealand dollar and selling US dollar on a dip. If we go to the single currency baskets, and we're going to concentrate on the US dollar first. So obviously if I'm buying New Zealand, selling dollar, or US dollar I should say, then I need to have a downward bias in the dollar index, which is DXY. If I go to this chart here, I can see that bearish bias for the US dollar. Remember that these BC legs are normally the hardest legs to trade. They will either pause at 38.2% or 88.6%, and I've actually got a resistance level here in the middle. So there is scope for selling from current levels, but obviously anywhere in this range it has the potential to turn around. So really the concentration is going to be on New Zealand dollar, and remember overnight we've got figures from Australia that could be a catalyst for higher levels for New Zealand dollar, obviously with these two single currencies being correlated. If we go to the New Zealand dollar chart, and I want to concentrate all the way down here on the 1-hour chart, you can see that we've got a confluence zone here, and again it's pretty tight, 261.8% extension of this wave, and we've also got an 88.6% pullback level of this wave, and that in turn makes another formation, another cypher formation known as a bat pattern. So we've got correlation here. We've got the New Zealand dollar highlighting limited downside. We've got the dollar index with a bearish bias. That in turn gives us our bullish bias on New Zealand dollar against the US dollar, and I'm looking to buy into dips. Okay guys, hope that makes sense. Good luck, and I'll see you again soon. Many thanks.